Morning, everybody. Sorry for the delayed start. It is 8:14 a.m. on May 22nd. All right, now yesterday, woof. Yesterday was a crazy day. All right, I didn't have the best trading day, um, and I broke one of my rules, which is just something that I don't want to do. Now, one of those rules that I broke was that tech was not weak yesterday, even though the market where we opened, I was like, I was thinking more short, and I jumped the gun a little bit because tech was not weak. And I generally just, even though the whole market was weak, tech was not weak. So I took a loss on that. However, I saw what I wanted and I shorted again, even though tech was not super weak. I wasn't super strong, but it wasn't weak, right? And then, unfortunately, an EU trade deal announcement happened like in the session, and it blew out my trade. I was in the money. I mean, not in it. Well, this is not options, but like I was had favorable excursion. I was in profit, and then boom, all of a sudden my stop get ripped. I actually got filled because the move was so violent. I didn't even get filled at my stop loss. It was like I don't know. It went way past my stop loss, which was annoying because I'm risking a certain dollar amount, and it actually I lost more than the dollar amount I was willing to risk. That was very annoying. Okay. Now after that, the markets became very disconnected. Right. The Nasdaq broke through the most traded price of the year, broke through the anchored VWAP from the recent highs. So that was a very key level, and Google was on fire yesterday because they talked about they're going to do an AI search and a bunch of different tools that sent them rising with like Meta, but basically Google, right? Then Nvidia started to rocket. So it was all about tech and communications yesterday, and I was like, geez. And then if you look at the ES, it was lagging because why? The overall market wasn't doing that great. So it was like you had a bullish sentiment going at the Nasdaq, and the ES was just really trailing. It was relatively weak. And if I just saw ES on its own, I would say, wow, that is my short setup right there. However, I had this tech that was ripping and roaring, right? So I just said, you know what? I'm going to call it a day. It was like a little afternoon. I was like, I just don't like trading when they're not on the same page. So I take a walk, or I go to take a walk, I think. Can't remember if it was I got back from my walk. Oh, I think it was when I got back from my walk. Actually, no. Sorry. Doesn't matter. Came back a little after 1, and I'm like, what the hell is happening? Well, turns out 20-year Treasury bond auction had its second highest yield, but there was low demand, even though the interest rate was so high. That spooked the markets, and the markets just fell apart. Okay? Bond market, we're all about credit. So even though the yield was so high, it didn't even have enough bidders. That is a little scary for the markets. Now, the markets are pushing lower now, okay? And the reason for that is I just saw some Fed speakers say we're not going to buy bonds in a primary auction. Because if they buy bonds, the Fed, that would lower yields. So that's spooking the markets right now. And remember what I said yesterday, right? I said seasonality generally in May is sell and go away. And you bottom in June, okay? And for some reason, right, this bond auction became a catalyst, right? Are we now, which looks like we are, getting some type of pullback? And again, I didn't say this was bearish. I just said that, look, something happened that nobody knew was going to take the markets down, right? And it's unforeseen. Like I said, what damage does this really do? I don't know. But remember when I talked about the higher yields go, not good for the generally not good for the stock market, because then those yields become attractive and then you want to go, oop, you know what? This market's too risky. Let me put my money in treasuries. Okay? So that's what's going on. All right. So we are now pushing lower based on what that Fed said, that they're not going to buy bonds in a primary auction. So crazy markets again, right? And we'll go over the hourly charts, a bunch of key levels that we broke. All right. So without further ado, welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All help me find structure, and that's my edge. Okay, I use anchor view ops as well, and market internals, which is the guts of the market, which lets me know once the market opens how strong or weak it is, and what is the expectations of the market. Okay. Now, real quick, I'll show you the internals from yesterday. Okay. So check this out. So we opened up. Now the bars are market cap weight. That is how our S&P 500 actually moves. They're based on all the sector weights. You can see the weights: 30% tech, 14.5 financials, healthcare 10, consumer discretionary 10, communications 9. Right? That's how our market works. It's a market cap weighted index. Okay, the white line here represents just if they were all equal. So that will represent really the overall market. Think of it as the NYSE, the New York Stock Exchange. Okay, and you can see there was a divergence here. You see how weak the overall market was compared to the market cap. And that was happening all day. That was because the NASDAQ was pushing and pushing and pushing, and the overall market was just like, eh. And there, right there, you can see we start to tumble right around 1 o'clock after that 1 p.m. bond auction. That spooked the markets. Okay, so that's what happened. Okay, now let's just get right into it and look at futures and what's moving markets. Okay, what is moving markets? A bunch of stuff happened yesterday. I mean, oil and a bunch of stuff happened. Okay, so let's get into it. Right now, Ethereum is cooking. It's up 5.51%. VIX is up 4.6, 60%. The VIX is at 21 now. So we're back into the 20s. Okay. Bitcoin's up 2.37%. There was some Texas, they passed something about the Bitcoin. I don't remember exactly. I can get into that later. 10-year yield is just, it's ridiculous. Okay. 10-year yield's up to 4.6 yield, up 0.44%. The dollar is up 0.14. The gold is down 0.08. ES is down 0.46. Nasdaq's down 0.46. The Dow's down 0.51. 30-year bonds being sold. Okay, they're still going lower. There's no bidders in bonds. Okay, Russell is really affected by rates, down 1.04. Okay, the higher the 10-year yield goes, just not good for the small caps. Okay, crude down 1.51% on basically a surge in inventory. Okay. However, I did put a little position on in crude along, and we'll see what happens in crude. All right. Usually, the higher the 10-year yield goes, crude will follow. And there is, I'll show you later what I'm seeing in crude. It is just worth the risk. So we'll see. Silver is down 1.92. 1.92. Okay. Mag 7 Plus. Let's move on. Okay. Mag 7 Plus. Coinbase up 1.47%. Google still going up. Okay. Up 0.57. Now the rest are laggards here. We'll go to 50% and more. Well, we'll start with Nvidia, down 0.47. Apple's down 0.69. Boeing down 0.70. Broadcom down 0.91. Eli Lilly down 1.10. Okay, that's the number one stock in the healthcare sector, largest holding in XLV. Tesla down 2.04%, down 2.04%. Okay, United Healthcare is taking a tumble again, down 3.24%. Just show you that really quickly. Down at the bottom of that list, down 3.24. Okay, Snowflake reported earnings, they're up 8.31%. There you can see Snowflake at the top of the list. Sectors, here we go. All right, now XLP defensive staples is flat. Right, that's a defensive thing. Real estate, right? Let's go to the over the 50 percenters here. We'll just start actually with tech, down 0.43. Financials down 0.44. Discretionary down 0.57. Healthcare down 0.65. Healthcare down 0.65. Okay. Energy down 0.69. Utilities is the laggard. Utilities. Okay. Utilities. Now, utilities, generally, people buy those for the yields, right? The stocks there for the yields. And when yields go higher, people tend to get out of those and go buy bonds. So, there's two different things in utilities. People are also buying them for like data center stuff for energy as well. But this is really what yield like the utilities is. Usually, when the bond market yields go higher, people get out of them. All right, so that's generally why they're the lagging today. All right, so a lot of stuff going on. We just have to see. Okay, we have to see what is going on. All right, now let's move on to the economic calendar. Okay, we do have something on the deck today. Initial jobless claims at 8:30. Chicago Fed at 8:30. That doesn't. The initial jobless claims really hasn't moved the market lately. But 9:45 you have PMI. Okay, PMI 9:45. So I have an alarm set. I'm probably going to stay away. You have 10 a.m. You have home sales. All right. So after 10 a.m. is probably when I'm going to be looking. And sometimes it sucks because I have a setup at 9:45, and then I'm like, well, it's not worth it to put a trade on. It kind of. I hate these 9:45 ones. They just stink. Okay. They stink. Fed Williams speaking at 2 p.m. Okay, Fed Williams speaking at 2 p.m. Okay, so let's get into it. Let's look at what was I going to look at here? Let's go here. So I saw the Trump tax bill advances. All right, now it's going to the Senate. Okay, so it was passed by the House. Now it's going to the Senate. Let's see here. Plan to beef up Fed forecast hits hurdle among its regional presidents. A proposal of the U.S. Federal Reserve to release detailed economic forecasts after some of its meetings to anchor the discussion of monetary policy is drawing fire from the heads of the regional banks who worry it will be hard to agree on a common outlook. Risk further confusing the public. Okay. Prices for new U.S. drugs doubled in 4 years as focus on rare disease grows. All right. Now, here is what I want to talk about oil. In commodities, oil fell over 1% after a report that OPEC Plus was discussing a production increase for July, stoking concerns about demand-supply mismatch. Gold took a breather after rallying last session. Okay, Snowflake, the company raised its fiscal 2026 forecast for product revenue on Wednesday, betting on strong demand for its data analytics services as enterprises prioritize artificial intelligence spending. The company shares rose 6%. Well, they're actually up not 8% now. With Zoom, the company raised its annual revenue forecast on Wednesday, benefiting from hybrid work trends and the integration of artificial intelligence on its products. The company now sees fiscal 2026 revenue between 4.80 billion and 4.81 billion. Okay. Let's look at anything else here. Nike, the company, is planning to raise prices on some products from next week and will sell items on Amazon after 6 years, the company said on Wednesday. Walmart, U.S. retailer Bellwether, is planning to cut about 1,500 jobs as part of its restructuring push to simplify its operations. Right. Microsoft Evercore ISI raises target price to 515 from 500. Rivian Piper Sandler raises target price to 15 from 13. Target TD Cowen cuts target price to 105 from 110. Zoom, JP Morgan raises target price to 85 from 80. Remember, Zoom during COVID was like at, I want to say, $500. It was crazy. Okay. All right. Let's look at the juice. Like I said, what did I see here? Let's just refresh this for a sec. Let's go to risk here. All right. Let's see here. I want to see what the Fed speaker says about the bonds. Let's see in the red here. If tariffs settle down, the Fed could be in a position to cut later in the part of the year. Oh, here we go. Right here. Fed Waller. This is at 751. The Fed won't buy bonds in primary auctions. When I saw that, I looked, and that's when we started to break lower in the markets. Okay. Let's look at market moving here. OPEC 20-year bond auction. Let's see here. All right, but I know that's what I looked at. That how what we were doing. We'll look into that later about the chart. Just what I'm saying is when Waller said that, that is when the market started to break lower. Because usually you look at the Fed to kind of bail you out, buy some bonds. Okay, so interesting, right? All right, moving on. Let's see here. I think we're good here. Now let's look at breadth. Remember, I keep mentioning the 20-day simple moving average into percentage of stocks. Check that out. Remember, I keep talking about this when I said, we're getting a little frothy here. 87% of the market is above the 20-day simple. Look at now, 59%. See that? 59% causing a dip in the markets, right? Also said about the bullish percent index, okay, right here. Let's go to the 5 years. Yesterday it was at 75. Now I was basically looking at the Nasdaq 100. Okay, is really what where tech goes is where you generally our market goes. Okay, which Nasdaq 100. This was at 80. It's still at 85. Okay, still at 85. So 85% of the market is at a buy signal. That is definitely overheated. And now look, it just took a bond market thing to be a catalyst to push us lower. Okay. So let's go to daily charts now. Look at this crazy market now, because all you needed is something in May, like I said, general seasonality, to spark these markets, right? We were overheated. Okay, we were overheated. I've been mentioning that, and I always say you can go farther than we know. And then all it took was something out of the blue. All right, that's all it took. Okay, let's look at the SPY here. Let's look at our daily charts now. Okay. All right, so we have a primary. Well, this is a secondary trend line, but this was that trend channel, right? Well, yesterday we broke that, and we closed below the 9 EMA daily. We haven't hit the 9 EMA daily since May 7th. May 7th. Okay, we could not break last week's highs. Right there, 594.5. Could not break that. You can see the resistance just right here. We couldn't break it. Where are we now? 580.50. We are gapping down right here. Okay. Look at this little low here. We are down by that candle. We're not at last week's lows yet. That would be 577. Okay, we're right here gapping lower. Now let's take a look at futures. Okay, get a little better look at the price action. Now the futures, you can see, look at all those lower high, lower high, boom, right underneath the 9 EMA daily, hitting the 100-day moving average. Okay, here you can see last week's lows on futures is all the way down 57.35. You have last month's highs down at 57.75. 57.75. Write that down. 57.75. You can see, look to the left, that's also resistance here. Okay, so if we move down, you could move down to there, the 20-day simple moving average as well. All right, let's look at the Qs. Remember, the Qs are so much relatively strength yesterday. You can see it. We pushed above last week's highs here, right there. And then the bond auction happened. And boom, you finally broke this trend channel. And where did you land? The 9 EMA daily, right? Right there. However, we are down below this now. 511.50. We are right. 511.50, 511.50. We're gapping lower, but slightly below yesterday's lows. Okay? And the VIX just keeps rising. All right? This bond market is really going to put pressure on these markets. Okay, let's look at futures. Take a look at futures. Right at the 9 EMA daily. Now notice, this structure here is a lot less bullish than the ES. Because look, we're down right at this low and this low. We really haven't all out fell apart in the NASDAQ. We really just haven't. Look at this structure, right? You're just kind of holding these lows a little bit. Okay, right at the 9 EMA daily. And then just go back to the ES here. That's your NASDAQ, right? Your NQ futures. Look at your ES. You notice the difference? Look, we took out all these lows. Took out all of these lows. But yet in the NASDAQ, you're kind of just like hanging out like above here, right? So definitely a tale, two different markets, right? So very interesting because NASDAQ 100 really pushes the markets, right? 30% of the market cap weight in the index, you're going to go usually where tech goes. All right. Now, moving on to the bond market, your triple-headed monster here. That's the nuts thing. This is the nuts market, okay? You broke this downtrend. You ripped up, okay? All the way up here, above last week's highs, above last month's highs, the whites, 4.549 yield is last month's highs, okay? Or up here, we have resistance. That's exactly where it hit at 4.629 yield. This is no bueno here, okay? The last swing high we have here is 4.79, okay? This is not going to make Trump happy. The last time this happened, we had a spike here. Trump paused tariffs. Now we're above that level. It's kind of crazy, okay? It's kind of crazy, right? This is your triple-headed monster, all right? So we're going to move over to the dollar. Now, what's that dollar doing? The dollar is really just at this support level here. But if you can start cracking this, having that dollar raise up, right, we'll have to see. I don't really know what's going to happen here. But if this dollar starts strengthening up and yields start moving higher, that is going to be bearish for markets, okay? Higher dollar is not good. Now, VIX, fear gauge, 30 days out, right? Let's look at this 30 days out of fear here. Look at that VIX, we're rising, okay? Let's just look at, remember, orange levels are the weeklies. So that is over last week's highs. Over last week's highs, okay? 200 above the 200-day, above the 9 EMA daily, hitting the 20-day and the 100-day, okay? There's our VIX. Fear starting to come back into the markets. All right, fear starting to come back into the markets. All right, now let's go to the hourly charts, which is very important, which has been driving a lot of my decisions, and I feel like it's very key in what I've been showing you guys. Okay, very key. Okay, so let's look at this chart here. 1 hour futures chart. Okay. Let's look at it together. Let me get my marker out. All right, this is very important. And I have to remind myself, okay, because I'll be honest with you, the markets have been very easy for me to read in like the last couple of weeks. Very easy every day to pick a trade, and I guess I was due to have a day where like I broke a rule, or like I wasn't like you know one with the markets. And yesterday, the reason why was that big disconnect. Okay, and in the future, what I want to tell myself is when there's a big disconnect like that, you just have to wait because you want to be, you really want to involve yourself in markets when they're together, not disconnected, because something's going to be off. One is going to push either one up, or one's going to lead the other one down. Okay, so it makes it not the easiest to trade. You just got to be patient. All right, now this is ES futures. Now, big levels that I talked about yesterday. The big levels that I talked about yesterday. All right, was 59.08. Here that is. Here's that level. Most traded price of the month. I said we cracked that. You got to be bearish underneath that level. Okay. The other one was the anchored VWAP from the US China trade deal. And that has been supportive, supportive, supportive. And we broke it. Boom. Okay. Now I have a next VWAP, anchor VWAP. From this consolidation, the market bottomed here and ripped up, and that was a low. Anchored VWAP was all the way here, and it just broke that. So the average buyer from this low and this low are now underwater. Okay, they're underwater. Now, as far as yesterday, I had a trend line from this and an anchor VWAP here. This is what I'm talking about. And I can zoom in here. Just what I was seeing yesterday. And this was bearish to me. Okay, this was bearish. But the NASDAQ was flying high. So here's that high, right? Here's last week's highs. Anchored VWAP here. Now the anchor VWAP was resistance, 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 right? Resistance. And it lined up with this week's anchored VWAP as well, right here. And the market went right into this supply zone. And it was hitting up against this anchor VWAP from these highs. And I was like, oh man, that's a nice bearish. And it's trend line. Almost like that's a nice bearish setup, but the NASDAQ was pushing high. And there we go. That was it. Boom. Okay. Like I said, I wanted to be short here. Obviously, it would have wound up working and been a monster trade, but I did not know the bond market was going to happen at 1 o'clock. You just don't know that. Okay. So this is what we have going on now. Now I have an anchored view up from this bond market auction. That's here. Well, actually, yeah, that's here. And this is the anchor view up from the highs. Okay. Now you can see we took out this supply zone, so I can get rid of that supply zone. I mean demand zone. And look, there's a high volume node right here at 58.20. I talked about that level the other day. I said if we come down, we're probably going to come down to this 58.20. Now, you can see in the overall market, there's consolidation here from this high volume node. And this could be obviously support, and we could move back up. I don't know. Okay, I really don't know what's going to happen. All right, I'm just a messenger here. Now, looking at the NASDAQ, you're going to see the tale of two worlds here. Okay, you're going to see the tale of two worlds here. Big time. Okay, let's zoom in here. Okay. This is last week's highs. This orange line. Look at the resistance. Boop. Look at the resistance. Right? But here's the important part. Okay. This is the most traded price, 214.35. You can see it right here, of the most traded price of the year. This area. And remember what I kept saying. The NASDAQ has to find acceptance over this level to be bullish. Right? Well, look what it did. It ripped all the way up here and was holding, closed an hourly bar up here. And I was like, oh boy, this could be the move higher. Right? And came right up, and it was holding above last week's highs. And then the bond market happened. And then look at that, right back under that major level. And we've been under there since. And this was the move what I said when Waller said we're not going to buy bonds in primary auctions. Okay? So, we're back under that major level. Now, remember what I was talking about the structure of the NASDAQ. This was that swing low I talked about yesterday they need to hold. Well, if you draw a line here, look what we're doing in the NASDAQ. We came into single prints right here. Now we did take out, let me zoom out here. Zoom out a little bit so we can get the US trade China trade deal back in here. Okay. So this is the US China trade deal. That was the anchor VWAP. See support here, then we broke it right there. So that is underwater, those buyers. Okay. Now we haven't even touched this other swing low. Remember, the ES has broken this anchored VWAP as well. So if you look at this, it's like, okay, do we fall apart here, or do we get bought up and go back and start balancing in this big range? I don't know, right? Seasonality says we should maybe start to crack and go down and bottom in June, 206.84, the most traded price of the year. Then maybe you get the rally in June to September or so. Who knows? All right. So I got an anchor view up now from the scene of that crime. That is your bond auction right there. And you can see, I want to point out one more thing. The anchored view up from these highs was obliterated. You broke it big time. So I was like, well, those sellers are underwater. So now we have to see what happens here. Okay? Because now you have like this big selling market that if we move back up here, it won't take much to move that market higher. We have to see. The VIX is raising, so we have to see. I'm getting a little long-winded, but I just want to show you guys these key levels. I think they're very important. Okay? We just have to see. All right. Let's move on. All right, let's move on. Let me move you on to my next workspace. And that is our market profile, volume profile. And we'll look at this market together, okay? Here we are. This would be your market profile, volume profile analysis now. All right, I'm being long-winded today. I just want to give you guys as much information as I can of what I'm seeing. All right. I'm going to make this smaller now. Get some other levels in here. Really look at this market together, okay? All right, let's look at the profile of the weekly profile. So now we have this little excess down here. And this profile basically looks like a bullish imbalance to the profile, which just means you have no excess to the top. We haven't been able to make excess to the top. Okay? Value is up here. And now we're below value. Okay? You can see the ES went right into this demand zone and got bought. Right there. Okay, that's where we stand right now. Now, this also has a bullish imbalance to the profile. Okay? Also has a bullish imbalance to the profile. This is yesterday's close. Okay? We're right there. You can see the excess put in. So this means whenever you have a profile that looks like this, okay, it's skewed bullish, right? Because now it's incomplete to the upside. What it would look like to the upside would be something like this. Okay, so if we come up and start to push through this most traded price of the overnight right there, 58.69. If we push through that, you're going to start moving back up to 59.08, the most traded price of the month. Okay? Now, let's recap yesterday real quick. Okay, this is ES. Now it's going to look totally different when we do the NASDAQ. All right, so what did we do yesterday? We opened here, right there, right? Right at 59.08. And then we got bought up, moved up all the way up here, and you were like, the ES was just struggling to move higher, right into supply, right into the previous day's close. Okay. And I was like, oh man, this is a nice level, right up like the most traded price of the week. And I was just like, the NASDAQ's going crazy. So I was like, this just doesn't make sense. And then boom, right? Move lower, right? Move lower. All right. So let's just get into our levels now. Okay. I'm going to open this up. Okay. You can see the consolidation here. That was just boom, boom, boom. And then we broke it. We finally broke it. Okay. Alrighty. Move this over. Now there's obviously a supply zone here now. All right. So I didn't draw one in yet, but there will be the one there. All right. Let's talk about these levels here. Now, first thing is we are not gapping lower. We are right at yesterday's lows and the close. Okay. You can see this excess. So basically, most what happens when you get this excess is sellers took profits and new buyers came in, and when sellers take profits, they become buyers. Okay. Because they have to buy back their shorts, right? And then this could fuel something. Okay. So we have to talk about this 58.75. That would be a supply right here. Okay. If you're bearish, you don't want this to get taken out. Okay. Now the next level we're going to talk about is 59.02, is the 50% retracement of yesterday. That lines up with the most traded price of the month. Okay, lines up with the most traded price of the month. Okay. Now we have demand down here at 58.20. And guess what we have here? The unfilled gap. That's a monster. It's so big. I'm not going to say that's a big area. It is, but that's an unfilled gap. You don't want to go into that gap. You got a month-to-date VWAP right there. All right, so that signifies buyers are in control of this month. It's green. If you're above the month-to-date VWAP, buyers are in control of the month. If you're below it, sellers are in control, and that would be red. So that's a 5,800. Lines up with the gap. Okay. Now, like I said, okay, if you're short from up here, right, and you just came down, broke this consolidation, what are these shorts going to do if we rip this? It's going to probably come back to at least here. Okay. So this is our playground, right? Let's get into scenarios now. And I think this will probably be tricky today, to be honest with you. I think it's going to be tricky. All right, so price is right here, right at yesterday's close. We're right near the lows, but we have excess. Okay, and we know the most traded price of the overnight is right here. Okay, and we have supply here. So what I'm going to look for is a couple things. Okay, now we see we're starting to push up a little bit, and again, jobless claims came out. I don't know what happened with those, but bottom line is people could be taking profits now. Okay, so got a nice buying excess here. So what can happen? You can push up, get a nice pullback in here. If you hold here and you break this and hold it, you're going to go up to 59.08. Okay, you can't move that most traded price of the week up here, down here, you'll return to value. Okay, if you get over this, yeah, we're going to tag the 59.60. Now I don't know obviously what's going to happen. People are looking to buy dips. I don't, that's the way this market is right now. I don't know. Okay. Now, can we fall apart? Of course. Bear trap, right? A bear trap for me would be you come down, you take out the overnight lows. Okay. And either you hold this demand or you just rip down to 5,800. Now, this would not be great, but if you got a quick recovery, you could probably move back to here. Okay. Because that's that big gap. That gap needs to hold. This month to day VO needs to hold. Okay. This has to be quick though. If it meanders down here, then that means the market's just getting weak, and that's not good. We're going to go lower. Okay. That's all I'm really seeing. Okay. Now, I don't know what's going to happen. I really don't. Now, Google's pushing up. It's up 1.92% now. It's even moved higher. So, remember, like I said, we'll get into the NASDAQ structure. It's just not that bearish, the NASDAQ structure. Okay, so let's go to the short side. The short side could get ugly. Okay, price is here. Remember, yesterday's close to yesterday's lows, right? We have a nice excess, buying excess here. All right, so what you would want to see, all right, I would like to see something like this. Push up, break this consolidation, but then fail, come through that most traded price. All right, now we're cooking. Now you're probably going to take out the overnight lows. Okay, this demand zone, if you take that out, you're going to hit this gap, 5,800 month to date VWAP, right there. And if this market is weak, okay, and you can, like internally, it's just super weak, you're going to start to fill in this gap. And that gap is monster. Okay, it's a monster gap from that U.S. trade China deal, U.S. China trade deal. There's a demand here. Could it hold it? Possibly. But you're looking at going all the way down to that most traded price of the rolling year. And that is around 57.17. That's going to get ugly. Okay, that is going to get ugly. Okay, that's what I would look for. If, obviously, possibly, you were to move up and have trouble here at the 59.08, you could push up into here. There's a supply here. And what I think could happen is you could fall and then probably hang out here. I don't think you would just fall apart all the way down here. Okay, that's really all I'm interested in. I don't want to get too complicated into the weeds. I can give you way more scenarios, but that's the ones that I would like to see, and my favorite being the first one. Okay, that is the ES. All right, that is the ES. So let's move over to the NASDAQ, and it's so different. I mean, it's so different looking. It is so different. Look at the NASDAQ. This right here tells you everything you need to know. Okay. It doesn't even, I mean, we're looking at the ES down by, you can go lower into the gap. We're nowhere near the gap from the U.S. China trade deal. Google is firing. Nvidia now is positive. Something just happened. Right? Something just happened for tech. Because tech, I'm going to show you. I just showed you before where tech was weak. All right? Look at that. Communications now is up, positive. Semis up, positive. Technology, positive. I don't know what just happened, but it just turned green. Okay? And look at Google. It's up 1.87%. It was only up, I think, like 0.4 when we first started talking. So that's what moves markets, okay? So let's go back. All right, let's talk about some levels here. So here, right here, is single prints, okay? These single prints are right here. It found support here, okay? Which is bullish because it shouldn't if you're weak. These single prints right here. You're not even near the month-to-date VWAP in the Nasdaq. Okay, Google keeps firing off like this. This market is it's not going to be able to go down. Okay, now big candles here. Remember, we have our 214. What do I say? 30 something, 30 something, 214.30. That is your monster level. Most traded price of the year. Now we're below it. Feather in the cap for the bears. Feather in the cap for the bears. Okay. 50% of yesterday's move is 213.15. 213.15. Remember where the ES is? It's at yesterday's close. It's at the lows of yesterday. Remember that? Look where the Nasdaq is. It's not even by the lows. Okay? Not even by the lows. And it has a very balanced profile. Okay? Very balanced. Right at the most traded price of the overnight. So believe it or not, the Nasdaq is green because it's above the close. It's just nuts. Like I said, I don't know what just happened. Google's over 2% up now. This market is crazy, right? It really is crazy. All right. So let's look at this, okay? So you have your 50% retracement right there. This is what I would say. You have supply in that large level right here. Okay. I'm going to look at that. Okay. And let's break out what is the price action in the overnight. Okay. Look at that recovery. Look at that excess. Wow. Okay. That is, and it's pushing. You see this? It's pushing as I'm speaking. Something, and I don't know what it is, but something came out with sparking tech. Okay. So look at that excess. We were down here into this single prints, which remember when I talk about Elfie, elephant on a stick, elephant on a toothpick, usually you don't hold an elephant with a toothpick. But if you come in poor structure and there's very thin volume here and you get support, that's bullish, okay? And we're pushing up. Now remember what I said. If you were short from here and you came down, you consolidated, you ripped lower, and now we're ripping back. Yeah, you took your profits here, and anybody else who's holding is holding on for dear life right now. Okay? So we got to mark this off, this overnight high. Okay? And we got to mark off this low with our single prints down here. Okay? Like I said, man, it's just tale of two different markets right now, which makes it hard to trade because it's like, okay, the Nasdaq's strong, ES could be weak, but you really want to go where tech goes. Okay? Let's go to scenarios. I'm getting very long-winded here. I apologize. This is a lot going on. All right, let's talk about it. I'm going to do quick ones here. Okay. Price is right here. You're at the most traded price. Okay. And it's pushing and pushing and pushing. Okay. It's crazy. So, what do we see here? If we open up, okay, I can see us pushing, breaking out of this consolidation, right? Pulling back, possibly to the most traded price, 212. Okay. And then you could start working your way up into the midpoint, back up to 214. You got thinner volume here, right? You're not going to have much resistance. Okay. It's kind of nuts. Now, in the NASDAQ, because we're up in the range in the overnight, if we were to come all the way back down, I don't think that would be very bullish to get and buy the dip. Okay. I'd be very cautious if this came all the way down here. Now, don't get me wrong. If you took out the overnight low but recovered like this, I don't think we go up high. I think we probably maintain in here. Okay. It's this very tricky market right now. Like I said, look, after a big move too, I have to say this. Sometimes a big move down, we might stay range bound today, and the market has to digest this move. It doesn't mean you have to rip up. Could happen. The rip up could happen. Okay. It's kind of all I'm looking for here. And I just got to see how strong tech is. I could see already this market is not going to be easy to. Now, don't get me wrong. When I say easy to read, I always can read it. It's a matter of, can I formulate a trade that's highly probable from it? That's what I mean. Okay, I can always read it. All right. Oh, I just did that. I didn't want to do that. Oh, there we go. All right. Let's go bear. All right. So right here, all right, obviously there's going to be supply in here because we just dropped, right? And that's where we are. Okay. So what I would see is a push up if you come through the 212. Boom, like this, and hold. This is bearish, and we're going to probably revisit these overnight lows. You got single prints here. You could take those single prints out, then you got demand. If that demand does not hold, we're going to go down to at least 209. It's going to get pretty bad. Okay. It's just, can tech hold? Can tech hold up? I don't know. I really don't know. Okay. We just have to see. All right. That is one. Now, of course, I think the only other way too is if we do rip down and start holding and holding here, you could get a drop. Okay. Otherwise, I don't think if we started to just go up, 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 that I'm going to be like, ooh, I want to short here. Could be possible, but I wouldn't love it. Okay. We could fall back, but I don't love that. All right. So the Nasdaq's definitely tricky. You just have strength there. It's like I said, you fell so far and now bottomed. Are you gonna want to short here? Right? We're pushing up more. Right? But as we're speaking. Okay. So not easy. Not easy at all. All right. Hopefully you guys like that analysis. Gave you a lot of the golden nuggets there. All right. Now, hopefully you can join me every day. Right. In the mornings, give you the market story, the lowdown, why markets are moving, leaders and the laggards, daily charts, the whole nine. I just gave you short and long scenarios in the ES and the Nasdaq. I gave you those 1 hour chart levels. Okay. Hopefully you get something from it. All right. Now, if you want, of course, you can come join me at my Discord. All right. That's Influence Trading. Come join me. I update what I see every day. All right. You can join by going to my YouTube homepage. Hit the link. Come join. Ask me questions. And if not, I'll see everybody tomorrow. Remember, we have a 3-day weekend in the markets. Wish everybody good luck. Let's follow a plan. Stay green. Remember, no trade to trade. And I'm going to definitely tell myself that today. All right.